Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those confusing corporate filings. Today we are diving into a report from SLR HC BDC LLC, and just like visiting the doctor, we hope the news is good, but we are prepared for a checkup on their financial health. Today we are looking at a report filed by SLR HC BDC LLC. This is basically a snapshot of some important changes they have made to their financing. Think of it as them adjusting their financial toolkit to keep the company running smoothly. The main thing is that SLR HC BDC LLC has made some changes to their loan agreement. Specifically, they amended their borrowing arrangement to get more time to pay it back and at a slightly better interest rate. The company made what they call the Fourth Amendment to their existing credit line, which is like a credit card but for a business. This credit line is with ING Capital LLC. This agreement is officially called the Subscription Facility, and it's basically a $25 million revolving credit facility, which means they can borrow up to $25 million, pay it back, and then borrow it again. What's really important here is that this Fourth Amendment extends the deadline for when they have to pay back the money to March of 2026. Before, the deadline was probably sooner, so this gives them more breathing room. They also managed to lower the interest rate they're paying. It's now based on something called SFR plus an extra 2.65%. SOFR is a benchmark interest rate, and adding 2.65% is how the lender makes their profit. A lower rate means the company saves money on interest payments. The company also has to meet certain conditions as part of this loan agreement. They have to make promises about their business, provide regular updates, and stick to some standard rules that lenders usually require. It is like agreeing to certain terms and conditions to keep the loan. It's worth noting that how much they can borrow under this credit line is tied to rules in the Investment Company Act of 1940. This act puts limits on how much debt investment companies can take on to protect investors. They mentioned that all these details are a summary, and you can find the full legal wording in what they call Exhibit 10.1, which is attached to this report. It is kind of like reading the fine print to know exactly what everyone agreed to. Because they made some changes to their loan, they're also noting that this counts as creating a direct financial obligation. This is just a formal way of saying they have officially committed to this debt. The report also includes a section for financial statements and exhibits, but in this case it says not applicable. This means there aren't any new financial statements included with this particular report. It's really just about the loan amendment. Now, putting this all together, what does it mean? SLR HC BDC LLC has basically refinanced their credit line, giving themselves more time to repay it and at a slightly better interest rate. This is a good move because it reduces their immediate financial pressure and saves them money on interest payments. It also shows that lenders are still willing to work with them, which is a positive sign. Overall, this report is about managing debt and financial flexibility. It is not the most exciting news, but it is important for the company's long-term health. By extending their credit line and lowering the interest rate, SLR HC BDC LLC is making sure they have the resources they need to operate and grow. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and don't forget to subscribe for more corporate deep dives.